once you have your Bitunix account set up, everything that you do in futures is going to be based on USDT, right? Moving USDT. It's the little top right. You can see there's a transfer button there. That is where you're going to transfer over to your um, literally futures. So what that's going to do for you is it's just going to put you in a situation where when you're ready to do futures, that is how you will move money to futures, right? So the very first thing is funding your account, right? Which is fund it from any other exchange, right? You don't want to come up here and buy crypto here. You want to send it from somewhere. So it's your wallet. You can send XRP. You can send Solana, Doge. You send any crypto you want. You just simply go to the search button. If it's Solana, you type in Solana, and then whatever crypto it is, right? You move to the right hand side and you look for the deposit, right? And then once you hit deposit, it will take you to your personal deposit and network. Now, Solana only has a Solana network. So when you go to pick Solana, it literally, that's all it has. So that's why what makes Solana such a good coin to transfer around is because it doesn't have multiple networks. So you really can't mess that up. So you would just simply copy your address here. And then from your other wallet, you would just send your Solana here. And always run a test, send $10, watch it show up. And then that way you're like, all right, kind of work through your process. But I like to copy it twice, just to make sure I have it. And then a key thing that I like to do is I look at the first two letters, BZ, and I look at the last two letters, little o, number 5. So when I look at my withdrawal or my transfer or what I'm sending, as long as it's to that BZ05, right? The rest of the numbers in here don't matter because if I'm copy and pasting, the only thing that matters is that I got that correct. BZ05, right? So once you get your crypto, right? Once that kind of shows up, go ahead and copy that. Once that crypto shows up, then what happens is all you're going to do is turn it into USDT. So what I'm going to do here is I'm going to quickly just send a little bit over here. Let me run a quick swap here. Okay. All right. So I'm just going to do this. All right. I'll put this here. Put this here. Okay. And I'm just going to swap. And what I'm doing here is wherever I'm getting something, all I'm doing is I'm getting my Solana. So now what I'm going to do here is I'm simply going to send some Solana over here. I'm going to go to my thing. You can't see it because it's a wallet. It's called a phantom wallet. But I hit a send button. It's going to ask me for my Solana's address I wanted to send to. I look at the address, BZ, little 5, perfect. I put in the amount that I want to send, perfect. And then all I do from there is just hit send, and that's pretty much it. Now, some of the things that you do, you'll have to do an email verification or a 2FA and all those type of things, right? But once it's on its way, you head over to your left side here. It's called your spot account. Now, I normally like to get into my stuff where it's normally there's a little wallet to the top right there. I go in the spot account like that, and then that takes me to where the coins are lined up, right? So now all that we're going to happen here is once you get your Solana, you can see here now we have $12 in Solana. In order to make that where I can trade with it, I have to then trade it and sell it. So I go to trade, hit Sol USDT. Anytime you see the coin and there's a /, the other coin on the other side is the pairing, right? They call it the pairing. It meaning that the Solana / USDT is the pair. So if you sell your Solana, it'll become the other pair, which is USDT. And if you're going to buy Solana, the other pair is USDT. So you would need USDT to buy Solana. Now, once you do that, what you can do is you can go to limit order if you want. We're going to go to sell, and then you sell your Solana, right? Now, a lot of times on limit, the reason why I do that is whatever the current price is, 83.89. I know that I have to sell it for a little bit cheaper so my orders fill. I'll do it like for 83.60. I'll hit sell 100% of what I'm selling, and then the order gets placed. If you see anything here in open orders in this area down here, that means the order wasn't fully filled and people are they can't find enough people to buy the price that you're asking. So you might have to cancel it over here, cancel all. And what will happen there is it'll allow you to basically go back up and change the price. If you're in a hurry, then just use market order. It's pretty simple. But now that we've done that, we should be able to head over to our spot account. And now the Solana that we had, the $12, $16, is now gone, and it is now part of our USDT because USDT is the other pair. So anytime you sell or trade anything, you'll see when you hit trade, it's USDT, right? So it becomes this. Now, the next thing we have to do is fund our futures account, which is simply by going up here, hitting transfer, and you'll see at the top it says from future account to spot account, right? That's not what we want to do. We want the opposite. So we're just going to hit this little double arrow and we want the spot account to the futures account, right? So let's go ahead and move over $100 and we're going to hit submit. Successfully transferred over $100. There we go. So now that is going to end up inside of our futures account, right? So now to go over there and kind of see what we have, you can go to the top here, hit futures, go to futures, and that takes you over to your futures account, or go to your little wallet, hit futures, that then takes you over to your futures account. But either way, when you hit that little spot, you'll end up right here. If you're in this area here, and you're like, oh, where am I, right? You're just in the little side spot, right? That's why a lot of times you go here, you hit futures. It's kind of taking you to what your what's in your futures, right? So if you go to the top up here, it says futures. You then click futures. This will take you directly to the trading part of futures, right? So now in futures, the main thing we want to focus on is, first of all, our deposit. You can see here that our currency came over here. So we have, now we have currency, and that trade was already full over there. So what you see is the available margin is I have $100 in there because that's what I just transferred over, right? I'm currently in another trade here set up so I can show you guys how to make adjustments. Okay, so now that the available margin, which is what is tradable, and then you have your current equity, that's how much total is in there. So if you're not in any trades, your equity of 381 would be the same as your available 381. Here, because I am in a trade, that the amount that's in the trade is everything, the total is in equity, but because the 238 is already in a trade, then that only leaves available of 100, which means if I'm making another trade, whatever's in the available is what I can make towards a trade. And then up here, we have to always make sure that we're in a isolated, right? So whatever coin you do, if you do a new coin, so let's say I'm going to trade something like, let's say we're looking at, we'll just take a quick look. Let's say Penguin, right? And I go to Penguin, you can see it's on cross. What cross means is that it'll start taking from all available money that's in your account if it goes, negative, and it'll keep taking that money until you run out of money, and then it'll have its 80% liquidation price at that time. We want to make sure that when a trade is done, whatever trade we make is isolated to the rules, the stop loss, and the profits that we set when we set our trade. So that's kind of what setting isolated means. To the right of that is your leverage, right? Some people will have one bar, right? That'll basically be all you do is when you go here, you can go short or long, and when you click it, you'll be able to kind of adjust that one bar. If you've got the upgraded version, you'll see a green and a red. The green means that you're going long. The red means your leverage on your shorts, right? So those are the two different things. Okay. Now the key thing is once you're in a trade, you can't really adjust the leverage to make another trade with a different leverage because the leverage is already being used in a current open trade, and you would have to close that trade out in order to update a new leverage. The only way to make that adjustment would be to edit the current trade, which you can see here. My leverage is set at 15, right here, 59 on the leverage. I can adjust the leverage of the trade that I'm currently in by adjusting this slide pattern here, right? So if I wanted to make adjustments, then I would make it here, meaning that let's say I go from my 59, that means my max position value is 600,000. If I go down to 32, my max position is only 120,000. If I go higher than 59, I have a max value of what I have in there would be valued at 100,000, which just means the $200 that I put in there times 81% would be $100,000 maximum leverage that I'm using. And so it's like my 200's worth, that amount, $1 million or whatever, right? So that's how you adjust on that. And that's something we'll look at later. So the basics is once you're in a trade, you put your money over here. Now you're ready to trade, right? Whatever coin you're going to trade, you're going to put your isolated on there. And then you're going to go from there and make your choice as far as like how you're going. So we're going to take a look at XRP here, and we can see that XRP is making its decision to move up here. We have a 2 hour, et cetera, et cetera. So I'm going to say, okay, let's set up for an XRP trade. So we're going to go to XRP, and then we're going to climb over here, and then XRP will pop up. First thing I check is I'm isolated, perfect. Now I need my leverage, right? So my positive leverage is going to be up here on whatever I'm doing, and then my negative, if I'm shorting, will be on the other side. And then the limit orders, right? This is how we set orders. I'm always on the limit order side because I don't want it to just kind of like take prices that range the entire board. I want it to be very close to the price I want to pay. So currently, if you want the current price, you hit market, go back to limit, and then the current price pops up literally in the price, right? So market, back to limit, and that resets that price. So if you're sitting here for a while and you're about to make a trade, hit market, go back to limit. Now, the key is this. Whatever price you're picking in the limit order, it has to be valued less than the current price you're trying to buy. So if you're trying to go long, right, you're going to, or, it has to, long would have a higher value, right? You can't say, I'm going long, the current price is 137, but I'm going to offer 136, right? You're probably not going to get a lot of orders filled there, like for here. So current price is market, come back, 138. And I say, you know what? I want to pay 137.99. And I put on here that I'm doing 50% of my available, which is 100, which would be a $50 trade. I hit long. Now what it does is it puts the order there, and now I have a limit order at the price of $139.99. You can always tell your limit order because it's right in this green box here, right? So now when that price goes down, that's the price that's actually going to trigger it. If I want a better price, or I notice that, hey, I'm it's not as low as I want it to be, you simply grab it like I did and drag it down. So let's say I want it down here and I want to aim for this lower support area. And I say, you know what? I'm going to get a little greedy here, right? So I'm going to put 137.70. So now I have a $50 trade that is currently set at 137.70. And it's a limit order, so it's waiting to be triggered. Now, once you have that up there, you can go back. All you have to do is hit limit. And when you hit it, this allows you to make adjustments, right? So we know it's a 40x long up here. See how it says edit? We have the listed price is 138.05. That's the current price. And then the one thing we want to do is we want to go by ROI, which is the current like return on investment. So that'll put percentages in, meaning that when we slide here, we have a stop loss. If I say that, okay, I got my 50 bucks, I'm willing to lose 20% on my 50 bucks, which should, at the end of the day, 20% of 50 should be about 10 bucks. If you go down here and look, it says if your stop loss is hit, you will be negative $10. So it's letting me know the amount I will lose if my stop loss hits, right? So as long as I'm, where I want to be, I'm losing 10 because whatever, that I know that's correct. The other part is when you stretch out the wins, this tells you how much you could win. So if I'm doing 30% on that, it would be $15. And you can see down here, it tells me a 30% win would be plus 15. So it's really that easy. And then once you have that set up, you say confirm, because most of the time our targets are 30 to 40% and our stop losses are 10 to 20, and you hit confirm. And now that trade, when it does get triggered, you can see that it has the stop loss already put in here. And just like a stop loss, see how it says -$10? That lets you know that you're putting a risk of $10 loss from this area. Now let's say if I move my limit order up and I say, you know what, it's not coming down this light, I want a little bit better, I'm gonna go here. Now notice here that my stop loss didn't move and stay trailing. It just let me know by increasing my entry area, I have now taken my stop loss and added an additional $3 loss because I'm buying higher than I was. If I buy lower, then the $10 become $5 because I've cut my stop loss in half. So that's just to let you know. So if you move this up and say, okay, you know what, I'm going to take this here, but you have a stop loss where you only need to lose 10 bucks, you would then drag this up to where it said 10 bucks, and there you go. So that's your new area of limit order and stop loss. So if that does trigger, then you know where your stop loss is. So that is basically how you can maneuver a trade around while you're setting up, right? Now, let's go over here to the current trade, and all you have to do is hit if you're in a trade, you just click on it if you want to look at it, but this is a oil trade, right? So this is an oil trade that we set up earlier, and if you go down here, you hit your little TP and stop loss. That's what we're at currently. So currently it has a 54% stop loss, which means we would lose 139, and it has no profit, right? Because the most important thing is when you set a trade is quickly get your stop loss in. So if you set a trade and you're like, all right, I set a trade, let me get to my 20% real quick, bada boom, bada bing, click, and you're like, all right. So now you can evaluate what target you want. And if the trade goes crazy and spikes on you while you're deciding what you're doing, if 30% or 60% hasn't been decided yet, this at least protects me where if it does take off for some reason, I won't hit my liquidation number here, which is basically would liquidate me at this top line up here, right? So now let's say I'm in a trade and it's going against me. So let's say that I got into a trade and it's heading into a so this basically let us know. I think we got our XRP trade. Oh, we're in our XRP trade. So now let's just kind of slide over to XRP real quick. So our limit order hit, right? And I'm going to say, see this little box here says current only. When you click this, whatever trade you're currently looking at is the only one that'll show up down here where you're operating, right? And then you can unclick that so that you can see the other trades that you're in. So I'm going to click this real quick. And so I can just see the XRP trade. So here we go. Our limit order hit. We're in. Our stop loss is here. We're in. And if I go here and I hit TP, right, you'll see nothing's in there because it wasn't manually. It was already preset. So if you wanted to add something in there, you could and simply like say, okay, I'm in. My stop loss is going to be 20% like I want. And my target is going to be 40% like this. And then you hit confirm. And all you're really doing is basically doubling down on the stop loss and the target. So that way you can see and move them, right? So you have your targets here. And you can make adjustments, like I said, for those. You can kind of put them in there and move them where you want, right? So that's kind of like that. If you have two of those and you're like, you know, I might be confused here, then all you simply do is, let's say you take rid of that one, get rid of that stop loss there, and now you go back down here so you could see them physically, right? So you see how those got taken out? Those are the ones that you were manually. So let's say we take these out, which were preset, and I want to see them down here. All I do is come in here real quick, put in my 20% stop loss, hit confirm, get that put in there just in case something happens while I'm doing my thought process. Go to my 40% profit. Now that my stop loss already got set, I don't have to worry about it dipping on me while I'm doing this, and boom. And now you have those in there. You can move these as well if you want. But now when you hit this TP, you'll see it here and you can see the prices if that's better for you, right? So it's just something of personal preference or so, right? All right, so now that we're in the trade, we're all set. So let's go to the other trade because one of the questions was what happens when I'm in a trade already and I need to make adjustments, right? So let's slide over here. So you see how this is coming up here, right? Let's say that we want to add to this position because we were, let's say we're negative, right? So instead of being up this 5%, let's say we're down 5%, right? And I want to increase a little bit and I want to buy, or what they call cost average buying, right? All I would simply do is go to market, go to limit, and that puts up the new current price, right? So now that we have the new current price, I'm going to put a short and I'm going to add to my short, right? So I have 50 bucks. Let's do 25% of that 50 bucks. I want to add to this position, right? The current price, limit, market, limit is this. So if I'm going to buy a short, right, I'm going to have to pay, right? So if I'm shorting, I can't put in here that I want to buy at $109 and give me that. It has to be less than the current price because we're going the opposite direction. So if I'm shorting here and the current price is 159, I need to pay a little bit higher price, right? Because I'm going against it. So it'd be like 177, right? So I need to buy up here so that it buys in, right? So you understand that, you'll figure it out. All right, so I open up a short, putting in my order of my 25%, open short, and there we go. Now, the limit popped in. Maybe my stop loss a little bit here. The limit popped in, so it grabbed that, and this is how you can tell with the little S. And the limit was a little bit higher there, right? So it had to come to it, but it hit. Now, if we go down to the position, you can see that we've increased the position by 20 bucks, and that's the position that we're in, and that's how you can buy. Now, the one thing I want you guys to notice is here's your liquidation, right? So I'm gonna put a yellow line there. When you do buy, let's go ahead and do another buy here, 107.70. I need to pay a little bit higher than that because I'm shorting. So let me buy this here. I open up another short, right? And that's when it has a target. The one thing you'll notice is your liquidation prices start to move further away from the current price as you buy in, because what's happening is that you're stretching the price out. You're moving down. The other thing that happens is not only does your liquidation price in, but your entry price, which is right here, will also change, right? You see how it used to be the yellow line here and now it's moved up. That's because the price is where you bought is now you're buying into this, and you're cost averaging into your price. So this way you're working into the negative field and putting yourself in that position, right? So that way, and you can see here your liquidation also moved up, right? Those two things moved because you're adding money, so it's changing those positions. What it doesn't change is your stop loss. It just changes the percentage of the stop loss. So if I go here, you can see the stop loss percentage is set at 30. We had it at 20, right? So it's moving in that type of section there. So that is how you can adjust and add money to a trade. And if you're catching a bounce or something and you wanted to buy more of a bounce so that it can go in the direction that you want, that is basically what you would do there. So I'm gonna move this back to kind of what we were anticipating earlier, my original stop loss. And that is how you move your trades around, right? And that's how you add money to a trade. You simply purchase just like that, and then you'll see the little buy signals go in. But yeah, that's how you add additional money. Now, if you're closing, it's pretty simple. You go down here and there's a quantity, right? So you can close 25%, you can close 50%, you can close 75%, or you can close 100%, right? So let's say that you're on a roll, it's pushing and you want to take profits, or maybe you're in a trade and you put too much in and it's going against you and you're like, you know what? I want to take half out here and I'm gonna put it in a better buying position, right? So let's say I wanted to take this 280 and I wanted a better buying position, right? So I just bought in and I said, oh, I put too much in, right? So I'm gonna take 50% of that, right? So I hit 50%. Then instead of market, I quickly hit last price. Then I hit close, okay? And what that's going to do is it's going to pick a price that is more like a limit order in this area here, so that it's not filling a coin from 107 to 109, right? Because it's normally going to give you the worst price on there. So I'm being very specific. Sometimes if you do that, let's try it again. If let's say 25% and I hit close, right? I go to last price, close, and you see how it doesn't fill here? It's because that order, that limit order, the price has changed. So I'm limited order here where I'm trying to fill at 108.01, and currently it's lower than you see, it's higher than that price, right? So if I'm shorting, it's not going to give me the better price in my direction. So let's say that I really want to have this field, then what I would do is I would simply be sliding this up towards the price that it currently is. So like 108.01, 108.03, something like that, right? Um, and there you go. So sometimes if you don't have enough money to cover, it won't let you slide because as you move it up, it might change the cost of what you're buying. So you always want to have a little bit of extra available margin in there, which allows you to move. So basically what happened there is I put too much money in. I decided it was too much. I sold my position, and instead of the 280 or 300, I'm down to 100 of my entry. Now, if I wanted to catch a jump, or say I wanted to set a limit order at 108.39, I would simply put my limit order there, and I would put the other part that I want as a limit order, and now I have that set up there, right? Now keep in mind, when that order does fill, my liquidation is going to move again. It's going to jump up to here. My entry is going to jump up to here, but my stop loss doesn't move. So what I can do is I can move my stop loss up to here a little bit, which will allow when that hits, kind of recreates that thing, right? We'll come back and we'll visit that. But that is basically how you make your trades. Pretty simple. Let me click on this so I can see the XRP trade. We're going to head over to XRP, and let's go ahead and walk through some basics here. Let's say we're in a position where we decide that here's an example that we can use, right? We're down 2%. Let's say your cost average buying, and you're buying the support zone, right? So you're at like what we call a long, and you're doing a very low um, trade, like maybe 5%, 7%, and you see it drops below where your entry is, right? Now, whatever the cost is, you can see we're $51 in, which means if I put another $51, it will cut this negative 5% in half, right? It would become 2.5%, right? So you can buy down the negative side and then eat up these pullbacks, right? So how that would work, let's go ahead and walk through this because it's kind of what we just did. I go to market, go here. If I'm buying long, I have to pay a little bit more than the current price. If I'm shorting, I have to pay less than the current price. So here we're going long. So the limit order would have to be higher than 76. So I'm going to put 82 at the end. And this is where I have available $100. So if I did 50%, it would be basically matching my original entry, which would cut my 4% in half, right? So what I'm going to do is 25% here, and I'm just going to cut it by 25%. I'm going to hit an open long. And now you can see that that 5% negative has become 2%, and now I have a 75% position in this trade, right? Now, once again, what that does is moves my entry down to a better entry. So then as it moves up, I'm making better gains, right? So what I mean by that is, let's say our original entry was here, and a move to this little top here would be 0.2%. If I bought down like I did, the same 0.2%, now that my entry is lower, is actually lower. So let's do a 1% move here, right? So let's say our target's 1% right there. And my original entry was up here. And then when it went below the area that I'm in currently, and I bought down, right? Then what happens is my target for my 1% would be the top of this box here, right? 1% move. But if I buy down, my market goes down. And then what happens is my target for my 1% actually gets lower, right? So it's making it easier for you to kind of get to your target that you're trying to get, right? So that is basically how you buy into the trade you want, make the adjustments that you want. You can move your profits down once you buy in, to a certain level. You can, if you're up here and you cost average buy down, then move your entry here. to what you want, or you can simply go over to your TP. You'll have it here, and you'll say, oh, I'm going for my 40%, and my stop loss is still 15, and there you go. And that makes all the adjustments for you right there. So that's pretty much, that is how you do trades here. Make sure it's isolated. This is how you do your leverage. And then based on your swing, this little level here just breaks down the amount of the valuable money that is available. $80 is available. So if I want to use 40, I go to 50. If I want to use all 80, I go to 95. And that's pretty much it. And that is how you use your Bitunix to make trades, invest, and make enter trades and close trades, etc. Pretty much that easy. And how you close by quantity, 100% or whatever, list price, last price, there you go. So and it just kind of like, think of it as a limit order close, right? So let's say that the limit order is 137.78, which means this one would have to be 37.78, 37. So this is a little bit higher. So let's go. I'm gonna put this a little bit higher just so you can understand. So if I put the last close and I went to close 50% and I hit close, right? You can see that it's gonna put a limit here for a close. And since that price was higher than the current price, it didn't close, right? Because I'm going long, I have to close slightly below the current price because no one's going to sell it the opposite way, right? So let's say that I'm trying to really close that and the price is moving down and I start to move down with it. You can see the limit order starts to change, but I'm still controlling the number. So this is 137.79, right? So I'm waiting for this to bounce up a little, to kind of give me a better price for what I'm trying to sell. I don't want to pay this bottom wick here. And you can kind of like move down and decide on where you're at. But if you have to close, you kind of put yourself in there. And there we go. It reached up. It hit. If you got to close and it's dumping on you or something's happening, then just pull slightly past where it currently is so that it can start filling for you. But that's pretty much it, guys. That's how you put orders together, close orders, and use Bitunix for trading. So I'm gonna put this video in the Discord. That's the breakdown, and then we'll go from there. But that is how you use Bitunix to trade. How you add coins, you sell them, trade them into USDT, and you simply transfer USDT into your futures account, and you go from there. And that's kind of like the setup that you can use.